The unseen safety net. Why proper protection matters. Proper protection is love in action. Hi friends, it's me, Cloud, your golden financial buddy. Today, I've got something really important to share. Not just about money, but about love, family, and what truly matters most. Let's talk about proper protection. The kind that keeps your loved ones safe, even when life takes us by surprise. Insurance is not about fear, it's a promise. We plan birthdays, school runs, and retirement accounts. But millions haven't planned for the thing that changes everything. Sudden loss or a critical illness. What would happen to your family if tomorrow changed everything? 42% of US adults say they need life insurance or need more coverage, approximately 102 million people. Nearly half of American adults say they need life insurance or more of it. That's roughly 102 million people without the protection they feel they need. Source: LIMRA Insurance Barometer Study, 2024. Over the next few minutes, you'll hear true-to-life stories, see how costs spiral after a diagnosis or death, and learn what practical protection looks like. Denny was 38, a hard-working electrician, husband and dad of 2. He was healthy, paid his bills, but did not have life insurance beyond what his employer offered. One Saturday morning, he suffered a fatal heart event at home. Within days, the family faced expenses they'd never budgeted for: funeral arrangements, immediate household bills, mortgage payments, daycare, and the cost of replacing lost income. Funeral and immediate end-of-life expenses are not small. The median cost of a funeral with burial in recent reports is roughly $8,300. For families without emergency savings, that cost often comes from credit cards or loans. National Funeral Directors Association median funeral costs. A modest term, life policy, or even small permanent coverage would have given Denny's partner breathing room to grieve rather than scramble to cover bills. Part 2. Data break. How big is the gap? About half of Americans report owning life insurance, but a record-high share, 42%, say they need more coverage. That gap includes both the uninsured and the underinsured. It's not just numbers, it's the difference between a family staying in their home and losing it. LIMRA 2024, Part 3, The Diagnosis, Paula's Story. The doctor's words: it's malignant. Paula was 45, the primary earner for her family. She had employer health insurance, but no supplemental protection, and she delayed buying life coverage because premiums felt expensive when business was tight. After diagnosis, the immediate financial picture was staggering. Out-of-pocket medical bills, lost income during treatment, travel, and childcare costs. A recent multi-center study found an average monthly increase in out-of-pocket costs of around $592 per month following a cancer diagnosis, about $4,100 in the first 6 months for many patients. And those costs vary by stage and treatment. Open Study on Out-of-Pocket Costs After Cancer Diagnosis, 2025. Without a plan, like a policy with critical illness benefits, an IUL with living benefits, or even emergency savings, the family faced impossible choices: delay treatment, pick between medicine and mortgage, or rely on debt. Part 4. Wider Impact. Stats on Long-Term Care. It's not just death and cancer. More than half of people turning 65 will need long-term services and supports, and nearly half will need paid services. For many, the lifetime risk of needing long-term care is real. Source: AARP. 56% of people turning 65 will need LTSS. 45% need paid LTSS. 1 in 7 may incur more than $100,000 in out-of-pocket costs. Costs are rising. National hourly costs for home health aides and in-home services averaged roughly $34 per hour in 2024, and nursing home private room monthly costs commonly exceed several $1,000s per month. Genworth Cost of Care Survey 2024 and Care Scout data. Genworth Financial, Part 5, The Unexpected Burden. Consider Luis, 67, retired teacher, always independent. After a minor stroke, he could no longer handle daily activities. His family discovered Mom needed daily care, and the cost of home health quickly outpaced their savings. Because they had not planned for long-term care, they either had to move their parent into lower quality care, exhaust their savings, or rely on one family member to quit their job to provide care. This isn't hypothetical. Many families are forced to make these trade-offs. Part 6. What different protections do term versus permanent versus IUL versus riders? Protection can be layered. Here's what each piece commonly provides, and 2 quick examples. Term life. Income replacement. Affordable death benefit for a defined period, for example, 20 years. Example: a 20-year, $250,000 term policy can replace lost income during mortgage and school years. Permanent insurance, and IUL, indexed universal life, provides lifetime death benefit, flexible premiums, and a cash value component that can grow tied to an index with caps, floors, and be accessed while living. Example: an IUL with a long-term care or chronic illness rider can pay benefits if you need care later, sometimes viewed as a hybrid that protects both death benefit and living needs. Critical illness riders, living benefits, provide lump sum or monthly benefits on diagnosis of specified illnesses. Example: a critical illness rider that pays $25,000 per month at diagnosis could cover experimental therapies, travel for treatment, or rent while income is lost. Long-term care insurance, hybrid products, standalone policies or life insurance with LTC riders can provide daily benefit amounts for care and help avoid draining retirement assets. Product features, costs, underwriting rules, and riders vary by carrier. No product eliminates risk, but many close the gap we showed in the stories. Part 7. Data hits. Why early action matters, comparison of purchasing younger versus older. Buying earlier often means lower premiums and fewer underwriting barriers. For LTC specifically, premiums are typically lower if you secure coverage in your 50s or early 60s. Waiting can make coverage unaffordable or unavailable. Source: Kiplinger and LTC guidance on timing and underwriting. And when illness hits, insured patients see significantly smaller spikes in out-of-pocket costs and more options for paying for care. Source: American Cancer Society and JAMA findings on financial hardship. American Cancer Society. Part 8. Practical step-by-step. What you can do now. Here's a simple plan you can follow. Run the numbers, add debts, mortgage, future college costs, Funeral costs, $7,000 to $8,000 median, and 10 to 15 times your annual income as a rule of thumb. That gives a starting coverage target. Prioritize. If budget is tight, start with term for income replacement. Add an IUL or riders later for living benefits if you want cash value and chronic/critical illness protection. Ask about living benefits. Critical illness, chronic illness, and long-term care riders differ widely. Ask how benefits are triggered and whether they reduce the death benefit. Get multiple quotes and check underwriting. Use a licensed professional and/or 2 carriers. Check medical underwriting windows and whether a policy is guaranteed issue, often more expensive. Set beneficiaries and a basic estate plan. Even a simple will and named beneficiaries avoids probate delays. Proper protection is love in action. Insurance is not about fear, it's a promise. The promise that if the worst happens, your family can keep living the life you built together. Protect today so they can be protected tomorrow. I'm Cloud, reminding you life is unpredictable, but your protection doesn't have to be. Love never leaves. It just plans ahead. Protect your family, because that's what real love does. Talk to a licensed professional. Message us to learn more. And please subscribe and like this video to promote valuable info like this. Salamat.